Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the markets? Well, we're still up near that record high, right? The record high on the S&P, and I think they're going to push it up higher. Now, why do I think that? I think they're going to do it with what's called stock buybacks. Stock buybacks are at a record level, and we're at record highs. Isn't that fascinating? What really is a stock buyback? Well, it's where the company buys back their own stock. Now, who are they buying it back from, though? That's the question I want to ask you. Who they're buying it back from is the executives, the CEO and the top executives in the company are selling their stock back to the company, and that's how they get their payment. That's how they make millions and millions of dollars. And the system works great. If you're at the top echelon in the company, you can sell your stock back to the company, and it's called a stock buyback. And stock buybacks make the stock go higher, pushes the stock market up higher. Now, is this a right thing to do for the company? Maybe it is. Maybe it's not. Maybe it's just a way that they really fleece the shareholders, if you will. It's a way for the insiders to get out with the cash while you're sitting there holding the stock still. It's not the way that the companies were designed. They weren't designed to have stock buybacks to push the markets up higher. But that's what we're seeing right now. We're at record stock buybacks, and the market's probably going to go to 6,400, maybe even 6,500 on the S&P. They're going to push it up higher. Now, don't get me wrong. I'm expecting a massive pullback this year in the stock market. Massive pullback, but we're still going higher right now. We'll see how that all plays out. Now, today I want to talk about really three things, right? I want to talk about the treasury bonds. I want to talk a little bit about the real estate market and a little bit about the gold market and how they're all intertwined. They're all tied together. Okay, now here's the thing. You see, right now we got a lot of treasuries going to be placed onto the market. $28 trillion worth of treasuries are coming due in the next 3 years. That means we got to find $28 trillion to buy those treasuries, right? And you got to tack on the extra $2 trillion we're printing in deficit, right? A lot of people think we're in a tight money scenario. Well, no, we're close to tight money. Just because they raise the interest rates up to 5%, that doesn't mean that money's tight. Money is very loose, flowing freely, if you will. Look at, we're printing wartime deficits, right? $2 trillion in deficits every year. That's what you do in the time of war. We're not at war. This is a time of peace, right? And if you throw on the recession that is coming, we're going to jump that up to $6 trillion just in 1 year of a deficit. You see, money is not tight. Money is very loose. And that's why the stock companies, they can get the loose money and buy their shares back from the executives. You see, money's very loose, but they're going to print even more and more money, even though we're already in a loose money scenario. Now, what you're going to see, though, when they do the money printing, you're going to see the long end. The long end of the bond market is going to start to go up. It's going to start to go up. Well, let's just talk about the 10-year bond, right? Okay, right now about 5%. I think you're going to see 6%, 7%, 8%. Now, what's that going to do to mortgages? What's it going to do to mortgages? It's going to push those up 8%, 10%, 12%. What's that going to do to the housing market? Now, this is just common sense. You can figure this out. As mortgage rates go up, demand's going to go down, housing market's going to come in. That's just my take. A lot of people don't believe that. A lot of people don't think we can get to a 10% mortgage rate. I actually think they're probably going to go a lot higher than that, but we'll say 10% mortgage rate. Now, okay, now you got the treasury market, right? The treasury bonds, we're going to have to buy basically 30 trillion of these over the next 3 years. Maybe even more because of deficits. Now, what's that doing to, well, let's just say central banks? Do they want to hold treasury bonds anymore? No, they do not. Why? Because they know that we cannot get out of the debt we're in. We're in too much debt, and the debt is ballooning higher and higher and higher. Every year the debt goes higher. We can never pay the debt off. Now, that's what the central banks around the world are seeing. So what are they opting for instead of treasury bonds? They're opting for gold, right? Now, gold is a tier one asset now, right? Used to be a tier three asset. They moved it to a tier one asset, meaning it's the same as treasury bonds, but it doesn't have the counterparty risk of the treasury bonds. You see, if other countries own our treasury bonds, we can weaponize it against them, right? We can weaponize the dollar like we did to Russia, right? We took $300 billion of their assets and we gave it to the Ukraine so the Ukraine could float bombs into Russia, and Russia is paying for the bombs that are blowing them up, right? Now we see other countries don't want that. They see that we've weaponized the dollar. Weaponized it against Russia means we can weaponize it against anyone we don't like, right? So they want to get out of the dollar, and they're smart to get into gold. Gold has outperformed a bond market for the last 25 years. It's doubled it, actually. Bond market's been about 4% and gold's been about 9%. Over double without any counterparty risk, without worrying if the U.S. is going to like you or not like you. So the central banks have doubled the amount of gold they're buying just in the last 3 or 4 years. They've doubled it. They keep buying it, keep buying it, keep buying it. Okay, now what's this doing to the housing market? Well, let's talk about that now. In real terms, gold is real money. Now, you can keep that fiat money all you want, but there's a big bear market in the fiat system. The dollar is losing its purchasing power, and the reason gold is accelerating now is because the dollar is even losing against other foreign currency. The dollar has been really strong against other foreign currencies, terrible against purchasing power, but now we're even losing to other foreign currencies and it's starting to come down. So this means that gold is going to accelerate. People say, but my gold's already, what is it? Look at it. I mean, you want a 1 ounce coin, 1 ounce gold coin, either a buffalo or an American eagle, you're paying $3,100. So you're well over $3,000. Well, I was just paying below $2,000 less than a year ago for a gold coin, right? So we went from $2,000 to $3,000 like in a heartbeat, right? Now, how quickly are we going to go from 3 to 5? Well, look, we're getting a little overextended here, a little overextended at this point, and we'll probably see a pullback, but we'll probably see that coming. Maybe once we hit that 3,000 on the spot price, maybe then we'll get a little bit of a pullback. But here's the thing. You see, we've accelerated. We keep going faster and faster. Now, why has it gone up so quick? Why is the acceleration? You see, a lot of people are thinking now, there's a lot of conspiracy theories out there, and I would agree with some of these. Okay, I would agree with some of these theories. Now, okay, now they're talking about Fort Knox, right? They want to do an audit. They got the Doge boys, right? Doge boys are in there sniffing around Social Security, but they want to go in and sniff around in Fort Knox to see if we actually own the gold. You see, nobody's looked at that. You'd have to go back to 1953, I believe it is, was the last time someone stuck their head in and looked at that. Look, in 1953, the reason they wanted to know if the gold was there because the dollar was still backed by gold. And people wanted to make sure that they had the gold just in case you wanted to trade your dollars in for gold. We don't trade dollars in for gold anymore, so nobody's audited this since 1953. They say we have 8,000 tons. Now, here's the rumor. All right, you got the Doge boys snooping around. They're going to want to start snooping around at the Federal Reserve. Now, I actually think that's a good thing, right? The Federal Reserve needs to be audited, needs to have some controls on because they can do anything they want. But the rumor is that the Federal Reserve is the one that's taking the physical possession of the gold. It's like $8 billion a month, $10 billion a month right now. Someone big is taking physical possession of the gold. Well, a lot of people think it's the Federal Reserve trying to replace the 8,000 tons that have been stolen from us by our own government. They've stolen our gold. We don't have 8,000 tons. And if you want to prove me wrong, get into Fort Knox and take a peek. It's not there. I'm telling you, it's gone. That's just my take. Maybe I'm wrong. I want to be wrong. I hope we have 8,000 tons of gold, but I think we're just like Canada. I think we have zero gold. But right now there's a rumor that the Federal Reserve is trying to buy as much gold as they can so that we have some. Now, I have always thought, if you go back, I have always thought, You could go back 20 years when gold was $300 an ounce, right? 20 years ago, 300. Now we're at 3,000, right? And people say gold's not working. It's only gone 10x in the last 20 years. Okay, but here's what I always thought the government could do. Let's assume they had 8,000 ounces of gold, right? Okay, well, the money, people are losing confidence in. So at some point, it will reset, and it'll reset against gold. There's a gold revaluation account in every central bank. They have an account for when they're going to reevaluate gold at a much higher level, right? Maybe it's 4,000, maybe it's 10,000, maybe they just bring it up to the market level of 3,000, which is possible, right? But if we don't have any, what are we reevaluating, right? Well, if we don't have any, it doesn't matter to us because we don't have any, but they're buying it now. But I thought they should have started buying it a long time ago. Back when it was $300 an ounce, we had 8,000 tons. We had, I don't know, let's call it 10 trillion in debt, right? Okay, what they could have done is they could have secretly started to print money, because printing money, you can print all the money that you want. I mean, money's fiat, right? You can print as much as you want. So print another $10 trillion and quietly over time double that 8,000 ounces to 16,000 ounces to 24,000 ounces. And right about there, you'd be at the same level playing field as China. I believe China has 24,000 and not ounces, tons, 24,000 tons. We're supposed to have 8,000 tons. I think we have 0 tons, but China has about 24,000 tons of gold. But if we started buying the gold, and that's what they're doing right now. So it's kind of almost like the reset is starting. We're going to reset gold at a higher price because they don't care what they're paying it at. They have to get some gold if they want to compete on the world stage with China, right? We have to increase our gold supply, and that's what they're doing. That's the rumor. I don't know that they're doing that, but it does make a lot of sense as you see gold go up every single day, higher and higher and higher. Went from 2,000 to 3,000. I think we're going to go from 3,000 to 5,000, from 5,000 to 10,000, and it's going to happen in a heartbeat. Now, if you want something cheap, you start with silver, right? Silver, they're giving it away. It's free. When gold's $10,000 an ounce, silver's not going to be sitting at $33 that it's sitting at right now. It's going to be well over 100. It's going to be the asset that you can get into right now at $33 an ounce. Okay, so now real estate, in terms of gold, what has it really done, right? In terms of real money. Now, okay, here's the thing. Real estate, your house is just going down, 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 down in terms of real money, in terms of gold. The only thing holding your house up is they keep printing money and keep losing purchasing power, and that's holding your house up at nominal rates so you don't realize that your house is being devalued. It's being devalued. In 2016, to get the average price home, 2016, it took 235 ounces of gold to buy the average price home in 2016. All right, moved to 2020. It took 193 ounces of gold to buy the average price home. Moved to today, takes 148 ounces of gold to buy the average price home. So in 2016, 235 ounces. Today, 148 ounces. Basically, your home has already gone down 40% in purchasing power, 40% in real money. Now, I do believe that's going to continue into nominal terms if they do not print 10 trillion, 20 trillion, 50 trillion, 100 trillion. They could hyperinflate your house up here just to keep your house up, because they can't really have it coming down because they need the property taxes to come in, and you're going to be the fool paying the higher property taxes. But right now you see how prices of homes have come down in real terms by 40%. Will they do it in nominal terms? I believe they will. I believe they will, unless we print the 50 trillion, the $100 trillion, right, to keep everything propped up. But I do see a market crash coming. I can see the market crashing, stock market crashing. I see your house crashing right along with it. And this is all tied to the bond market, to the gold market, to the house market. Now, are we going to go continue to buy gold and bring some gold back into Fort Knox? I say we don't have any in there, but I do believe that the Federal Reserve is actually the one in there taking physical possession right now, because 8 billion, 10 billion a month coming out of the COMEX in physical possession is not normal. I do think it will continue as you see the price of gold go from 3,000 to 5,000 to 10,000. This is the way they're resetting the price without actually saying they're resetting it. They're just going to buy it all the way up, and hopefully by the time they're done buying it, they've replaced the 8,000 tons, maybe doubled that to 16,000 tons. We'll see how this all plays out. I'm Tall Mike. You like this stuff? Give me the thumbs up, punch the subscribe button. Get out there, everybody. Have a great day. Bye-bye now.